So now what Troika is about to start doing is you'll notice that there are these stepping patterns. We've had a floor here, a floor here, a floor here, a floor here, and a floor here. Now we're going to start moving in this parabolic curve pattern. And this is what happens. There's this big squeeze that shapes up like this. These parabolic curves are very indicative of massive buyer volume and volatility coming into the stock. Hello, everybody. My name is True Demon, and I am the Devil's Stockbroker. In this video, I'm going to be giving you the technical analysis and the short interest data on Troika Media Group, ticker symbol TRKA. This is a symbol which showed up on our Scourgebot that alerted us that this one was primed for a liquidity squeeze. I apologize that it's only truly being reported on as of now. As it turns out, Scourgebot was flagging this one for the last 2 weeks, and I didn't see it because it was at the bottom of my list of tickers to check, and I just didn't have time to get to it. Which is unfortunate because this one is actually set up in a more urgent and more prime position than HLGN is at the moment. So I'm going to be going over the technical analysis of this particular ticker. We are not taking fundamentals into account since at this moment they don't they don't really matter per se. There are some fundamental developments that have created a catalyst for a short squeeze to occur, however, and I will be discussing those as we go through this. So, Troika Media Group, I'll just go ahead and briefly describe the company. This is a marketing services company that leverages data and technology to deliver integrated branding, marketing, media, and analytics solutions, according to their own company description on NASDAQ. So, this company was IPO'd back in April of 2021, which was actually a great time to start a company and go get listed on the NASDAQ. However, their business model wasn't fully developed and they are not profitable at this moment in time. This company was being reported on by a few other YouTubers who I'm familiar with, Hoot Money being the one that sticks out the most. He was pointing this one out several months ago, if I recall correctly, but it's been getting beaten down repeatedly, and only just recently did we see some really truly massive spikes in volume that are worth paying attention to. So going back to February of 2022, this was about the time that the 200 period daily moving average showed up on this one, and this is this is a very new ticker, 200 days since appearing, or it's been almost a year since the 200 daily moving average appeared on this one. So the significance of this moving average is that it acts as resistance against this company, kind of guiding the downward channel on it. What has happened, however, is the channel that has been trading in over the course of the last, 2 years now is been broken. This channel broke back around the time that it had this big volume spike right around in December of last year. So this break happened right here, and it established a floor at approximately 8 to 10 cents. So we'll just give or take, since it's more of a trading range than a flat price. So the biggest catalyst for this company failing was immediate delisting due to NASDAQ lack of NASDAQ compliance and failure to report earnings. As you can see, their earnings have been really bad. They haven't reported anything truly, good or anything to be excited about with the company. Up until very, very recently, there was all this speculation of dilution and possible delisting. So everybody was under the assumption that this was a big money grab. Shorts piled in very, very hard. They dove in headfirst into this one, and they especially got very aggressive very recently. I'm going to go into that very soon here, but what happened um, within the last 24 hours was Troika Media had withdrawn its S1 filing, which is a shelf filing for distribution of additional shares. Basically, it was the filing that stated their maximum allowable shares that have been um, um, produced and added to the inventory. They've withdrawn that. So now those shares, that shelf filing is no longer on the table. No further 424B prospectuses, which are sale of stock announcement filings, can be issued until a new shelf filing is presented. So right now, as of this moment, the bare thesis of dilution to death has been basically taken off the table because the company physically and legally cannot issue any new shares while there is no S1 filing. So this development really kicked shorts in the teeth and caught them by surprise. What was especially interesting about this is that this news didn't hit until the end of February. We only just got this information, and the thing is that Troika Media has been setting itself up for a big move. It's actually been guiding itself up over its 50 period 2 hour moving average. If I switch this to daily, the 50 period EMA right here, that's this green line, it's already found support. And we know that the 50 period EMA is a significant level of resistance to break that is our first sign of a breakout and possible reversal. It's not confirmation, but it's the first setup. And often the strongest moves happen after this break has occurred, which was back here. This was the first true breakout, was this candle on the 30th of January. And then it's remained above this moving average ever since then. It has tested it once, but it has not broken it. That is what is significant here. The other thing to point out is these volume direction candles. The MACD and the RSI both look bullish, but I want to focus on the volume direction candles, which, if you are not familiar with this indicator, I'll go ahead and put it on here. It's called Volume Direction Candles by JD. Check this out for yourself. Essentially, it's a modified OBV, or on balance volume indicator. The significance of this is that it shows volume in relation to buying or selling direction. So it doesn't just show raw volume in terms of its summation or the adding of subtracting of volume based on buying and selling. It actually shows the momentum that that volume creates in the price action relative to that volume. So what's very interesting is that the volume is extremely strong here relative to the price action to a very extreme degree. You can go all the way back in time and you will not see any other time except this massive squeeze like move that occurred here, where it moved from $1.20 all the way up to a high of $3.50. And that move is dwarfed by the amount of volume that's produced here. That can probably be assumed to have something to do with the fact that they have diluted stock in between that time. So there has been new shares issued into the market by Troika Media, but but still the amount of volume here is extremely significant, especially when you compare it to their float. So that's where this thing starts to get really interesting, is that this is a micro float stock by all accounts. And I know it's very easy for institutions and market makers to control small float stocks as long as those shares are free floating in the market and they can control the inventory of them. But when retail investors or any large institution buys a significant portion of those shares and holds them past settlement time, then that inventory gets depleted very quickly, especially if those are moved to accounts that do not permit short selling from those accounts. So if those shareholders are not part of a share lending program, then those shares are not available for short sellers to use. And that really depletes inventory for market makers, wholesalers, and short sellers in general, just regular institutional and retail short sellers. So the situation is that there's only a 35 million share float right now, and all the bears were banking on there being this massive dilution coming with this huge shelf filing. I I'm failing to recall exactly how many shares it was. Yeah, Yeah, I don't recall exactly how large the shelf filing was, but since it was revoked, it was a significant amount of shares. It was going to significantly increase the float of shares if that full dilution went into effect. Now that the filing is gone, that idea has been essentially slain. It's not on the table anymore until a new shelf filing can be approved, and that requires a shareholder vote. And then after that, there has to be a 424B prospectus, which is going to announce a sale of stock either to institutional, private shareholders, or an at the market offering of some kind. So none of those things can be done until that shelf filing is there. That's the really important thing to get out of this. This doesn't mean that existing shares that were part of a previous shelf filing cannot be sold, but at the very least, new shares are not going to be produced that can then be sold. That's the important takeaway. There can still always be the potential for dilution if there are shares in their inventory that they can sell, but they cannot create any new shares to sell at this time. So just want to clarify that. Now, the other important thing that I would like to address here is the amount of short interest. So, short interest on Troika Media is extreme to say the least. 67.38% of the free float is already on loan by short sellers. Okay. And the amount of volume that just landed in the market, this hasn't updated to reflect the new amount of short selling or the available the current amount of shares on loan at this time. But this last day was extremely high volume. It's traded more than 6 times its float at this point. That's extremely unusual. The only other stock that is in recent memory would be Redbox. That was one that had a huge move after they announced a bankruptcy. Um, or I'm sorry, I'm thinking of Revlon. Um, Redbox was a different situation, but they traded significant amounts of volume above their float and created a squeeze, multiple squeezes really, that were kind of staged out. So Troika is doing a very similar move as Redbox, where it's got this incline going, and the short interest was rising the entire time during this while it's happening because it was a pretty significant rise. I mean, to be fair, Troika, from the point that it was trading at only 10 cents to the point where it was in February up about 30 cents. That was that's a 200% move in just the security's price. So it's fair for shorts to think that that's a lot of movement in a short period of time. But what I think was going on is somebody knew that shelf filing was going to be pulled back, and they started buying early, or a private investor is going to be funneling money into this company, and they knew that, or that information got leaked somehow, and a bunch of buyers started soaking up the in the market shares, and this prompted an opportunity, or so short sellers believed, and they started shorting it like crazy. So the short interest right now can be anywhere from potentially as low as 8% all the way up to 63%. We'll know more as time goes on and the confidence interval from Ortex gets narrower and narrower as more data gets reported and they're able to clean it up a little bit. But we're estimating that there's about 50% short interest on the free float right now. So essentially half. We're estimating half of the entire company has been sold short. That's a big proportion. Um, Further to that point, the amount of shares that have been utilized for short selling are at their maximum at this point. This is a recent development. Only just recently has utilization been maxed out. So there is still the possibility that new shares can be found and put into short selling inventory by market makers and wholesalers. But at the present, looks as though we've hit max utilization. So in theory, the availability of shares should be zero. And this is what I'm reading off of Interactive Brokers. So that data is corroborated here from Ortex with their connection to Interactive Brokers. Now the real star of the show, I wanted to bring in the Scourgebot data, which this really right here is FINRA data that Scourgebot is constantly monitoring for, And you can see that the short exempt volume was extremely significant back here. Scourgebot was yelling at me 2 weeks ago, back in the first week of February, that Troika Media's short exempts were extremely high when it was trading around 2019 cents or so. And it was telling me to take a position. And I didn't pay attention because it lists a whole bunch of different stocks that I have to filter through and manually analyze to be certain that it's a good decision. I don't just entirely take Scourgebot on faith. It's important to analyze your tools because they are just automated tools after all. It was very right in this case, and the short exempt volume got insane today. So today is Tuesday, February the 21st. The short exempt volume was almost a million shares, which is about 3%, a little more than 3% of their total float. So 3% of the float just got handled, we'll say, by market makers using short exempts in order to fulfill the buyer demand. So what this indicates to us is that market makers are filling orders without actually having access to the shares in order to deliver them. So this is putting them in a race against the clock to deliver those shares within T plus four, that's 4 settlement days, to deliver those shares to shareholders. If that doesn't go through, then it becomes a failure to deliver. Then they get 2 more days, so a total of T plus 6. And that's according to Regulation Short or Reg Show in the SEC filings, that those shares must be delivered. There's loopholes that they can use to get around that, but that doesn't matter so much to us as the fact that they are having a lot of trouble finding these shares and there's a lot of demand for it. So we know that the volume here is extremely high, very, 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 very high. And this is catching on quickly since there's 200 million shares that got traded today, and about 25% of that, or just a quarter of that volume, was short volume. That can be both shorts adding to their positions and shorts covering their positions. I suspect the smart ones are covering right now, and that is part of what we're seeing at the moment. Also, we had so much positive price movement today that the 5 day simple moving average changed by a rate of 9%. That's a massive move in a very short amount of time for it to be able to pull the entire moving average up by that much of a difference in just one day. It's a small price too. So that's a big move in the moving average versus the price. I know it doesn't seem like a lot but considering that we went from a low to a high of 25 cents to 33 and a half cents in a single day and then closed just at 28 cents is a big signal that there's a lot of volatility sweeping into this thing very fast. And I wish I had caught this earlier because there were way better opportunities to get better prices in this thing. Like we could have gotten prices as low as like 18, 19 cents in this ticker, and it would have been days in advance that we could have taken advantage of it. But, too bad, so sad. If you're not paying attention, that's just what happens. Um, Analyze it, figure out the next play, move on. But this thing's still happening right now. And as it appears to me, it's looking really, really solid. Now, something really important that's going on that I want to point out, however, is that we had a really big move to the downside at the second half of the day. And this probably spooked a lot of people, and that was its intention. So I want to point out what is happening here. Notice that the largest amount of volume happened at the opening auction today, and this big spike that brought the price all the way up to over 30 cents. It came slamming back down and had to hit its 9 period moving average on the 15-minute chart. And then it found support there, established the new VWAP and ATR bands, and then found support right here at 25 cents. Very significant psychological support, and we moved up. Touched a new psychological resistance of 33 cents, but we broke that previous psychological resistance of 30 cents. So now what Troika is about to start doing is you'll notice that there are these stepping patterns. We've had a floor here, a floor here, a floor here, a floor here, and a floor here. Now we're going to start moving in this parabolic curve pattern. And this is what happens. There's this big squeeze that shapes up like this. These parabolic curves are very indicative of massive buyer volume and volatility coming into the stock. This has happened on quite a few occasions. A good example is definitely Mullen from back in February of 2022. The move that it made here was it's a classic example. Step up, step up, step up, step up, and step up, and see big parabolic curve pattern. So that exact same move happening in Mullen is happening now in Troika. So the the last step that usually happens is right at the 200 period simple moving average or thereabouts, and then it breaks through and finds some resistance, usually at a previous level of resistance, um, probably right around at 65 cents or so, and then it'll have a big spike down. And the question of how many step ups it can do is a matter of if it breaks the lows. So if it breaks this low, then it will try and then fail to break out again. Once the highest low has been broken, that's usually the signal that it's over. So that's one thing that I have been studying in these moves that I figured out is kind of that sign that the play is done. However, if you get another step up, then can go even higher, and then crazy price action can happen, especially as the liquidity gets drained out of the market and the shares start changing hands at radically faster paces. Especially in the case of a short squeeze, where you have 50% of the holders of this stock are actually short on it and they're getting murdered in the market because the price is moving against them so quickly and there's not enough shares available in the market for them to cover their positions, and they're scrambling to find liquidity. They are getting margin called and all sorts of craziness is happening, and the chaos just adds fuel to the fire. So this is the situation happening right now with Troika. They were also supposed to announce earnings today. I don't know if that actually was reported. I don't see it updating here in TradingView, and I'm not going to waste time in this video digging around for it at this time. We'll look for it tomorrow, and I'll try to get an update out to the Discord. But what's happening here in this particular stock is it's interesting. Okay, this one's really interesting, and I did mean to do a HLGN update on Heliogen. This is one that we've caught early, and it's still trying to establish a floor somewhere. So that's still being worked out at the moment. So for those people who were asking me for that update, that's still being worked out. We don't know where the floor is on the price. We're still waiting. But all of this volume that you see here, this rising volume, this is the early signs. And by the time that we get into like the later stages of this thing and it finds its floor and it starts moving up kind of like Troika Media does, if we start seeing this, the volume is going to be the spikes in the volume are going to dwarf what's been happening here. So you'll know it when you see it. Just keep analyzing the volume, set your screeners to be paying attention to it, and just wait it out, right? Anyway, back to Troika. The situation, as I mentioned, 50% short interest against the free float. There, I don't believe there are options in this ticker at this time, so there's no options. The volume direction candles definitely point to big buying volume. It's pushing this stock, and it's having a hard time fighting this resistance right now. It got smacked back down, probably by a big institution, taking profit or doing something else, or maybe it's just a big institution just slamming it down with a heavy amount of shorting. We're not sure, but it doesn't appear to be over because the volume is still rising at this time. And although the stock has moved by 200% since it hit 10 cents at the lowest point, the there's still massive amounts of short exempting happening here. We have to wait and see what tomorrow looks like. But so far, this thing is already shaping up for a big squeeze. And considering that a lot of the shorts got in rather a relatively long time ago, um, back when a lot of these guys started adding to their position at prices as low as 16 and 20 cents. And that's about where the majority of these guys have their prices at. So between as low as 16 cents, a majority or an average around 20 cents, and some are like way up there in way up above us at 30 cents. Once we start climbing past those prices, though, you'll find that the vast majority of these guys go underwater very quickly. Um, Most of them are already underwater, but the ones that have added into their positions since before February the 9th, those guys are the ones who are going to be having the absolutely roughest time now, and in trying to justify staying in their positions, especially without that shelf offering on the table. Now that that's gone, their whole thesis is dead. So this is a big opportunity for retail investors to take advantage of the momentum. There is definitely still a case for a short squeeze happening here, especially with Cortex data only being 2 days delayed. So this is a big opportunity. There's no way all this covering has happened yet, and I can point to that because most of these shares that have traded here, they still haven't we haven't seen enough volume in the FINRA data to suggest that the shorts have covered all at once. It's possible that there's been quite a bit of covering so far, but at the moment, it looks like a lot of shifting, shuffling of positions and getting in and out of positions. What I think is that shorts that were getting hammered got out and then got back in when we hit this peak just above 30 cents today. So we just got that first push down. Now we need to see how retail and the broader market reacts, and if we're going to see the stock continue pushing new highs. One thing that I want to leave you with that is very important here on this ticker is that this is a liquidity squeeze. Okay, there's a liquidity squeeze that's happening because there's a lack of inventory of shares. There's a lack of availability of shares. A short squeeze, yeah, you can also mix that in there, but this is a battle between big institutions that are playing with a penny stock. So retail's not in control here. That's what I really want to emphasize is that there's no retail control here, at least not yet. There hasn't been enough of that, retail surgence and euphoria just hammering the stock and beating the ask into submission and pushing that price higher and higher. Until that happens, then there's no point that retail is in control of this. And by that same token, if that were to happen, then retail is not only in control of how high they take it, they're also in control of when it crashes at that point, and that's very unpredictable. So please manage your risk in this situation if you're going to play this stock. It is an extremely risky situation. You don't want to over leverage yourself on this. There's not even a guarantee that it goes up any further than this. There's still very much the possibility that this is as high as it goes. I don't think that that's the case, but I can always be wrong, just like everybody else can be wrong. We are analyzing and taking our best guesses at what the market is going to do and trying to analyze the human psychology behind these decisions and the price action. So there's always room for interpretation and error. And for that very reason, you must manage your risk and be very careful and not bet anything that you are unwilling to lose. As always, none of this is financial advice, but I wish you guys the best of luck and I look forward to seeing you in the next video. Until then, have a hell of a time in the markets. Thank you guys so much for tuning in to watch this video. If you enjoyed the content and you found this information helpful to you in your own trading strategies, be sure to leave a like on the video. It helps out the YouTube algorithm and helps us reach out to others who need this information too. Be sure to subscribe if you want to see more. And if you're not a member of Hell's Trading Floor already, consider joining our Discord by joining us at hellstradingfloor.com, which will allow you to sign up for our Discord at discord.gg/hellstradingfloor. Thank you guys so much for watching, and I look forward to seeing you in the next one. Until then, have a hell of a time in the markets.